the money that doesn't exist. Your bank account is a lie. Not in some abstract philosophical way. I mean it literally. The money you think is sitting there, waiting for you, it's not there. It never was. Walk into your bank right now. Ask for all your cash. They'll give it to you, probably. But if everyone did that tomorrow, the system would collapse before lunch. Not because of incompetence. Not because of fraud. Because that's how it was designed to work. This isn't a conspiracy. It's policy. It's legal. It's called fractional reserve banking, and it's the most successful magic trick in human history. The birth of the trick. Go back to medieval Europe. Picture a goldsmith with a vault. You're a merchant, and carrying gold is dangerous. Thieves, bandits, accidents. So you leave your gold with the goldsmith. He gives you a receipt. Simple enough. But here's what changes everything. People start trading the receipts instead of the gold. Why bother with heavy coins when a piece of paper works just as well? The goldsmith notices something. Most days, nobody comes for their gold. It just sits there, doing nothing. So he gets an idea. What if he issued more receipts than he had gold? What if he had 1,000 gold coins but wrote receipts for 2,000? As long as everyone didn't show up at once, nobody would know. He could lend out those extra receipts, charge interest, and profit from gold that didn't exist. It worked. And when it worked, everything changed. Money was no longer tied to reality. It became a promise, a belief, an agreement that we'd all pretend together. From goldsmiths to governments. By the 1600s, this wasn't just a scam, it was the system. The Bank of England was founded in 1694 for one reason. The king was drowning in war debt. The bank lent him money it didn't have, in exchange for interest payments extracted from taxpayers. Think about that. The government borrowed money that didn't exist, then forced its citizens to pay it back. With real labor. Real sacrifice. That model spread everywhere. America built its banking system on the same foundation. Banks issued notes backed by gold they didn't have. When people figured it out and rushed to withdraw, bank runs, the banks collapsed. Thousands of them. And what did governments do? Did they stop the madness? No. They created central banks to protect the illusion. To make sure that even when the money doesn't exist, people keep believing it does. How it works today. Let me make this concrete. You deposit $100 in your bank. You assume it's safe. That it's yours. That it's sitting there. It's not. The bank used to keep maybe 10% in reserve, $10 of your $100. The other $90? Lent out immediately. That $90 gets deposited somewhere else, and that bank lends $81. Then $73. Then $66. On and on. Your original $100 becomes $900 in the economy. But here's the sick part. Only that first $10 is real. The rest is debt. Obligations. Promises to pay back money that never existed in the first place. And it gets worse. Since March 2020, U.S. banks don't have to keep any reserves. Zero. Not 10%. Not 1%. Zero. So what stops them from lending infinity? Not deposits. Not vaults full of cash. Just some regulations called capital requirements written by unelected technocrats in Basel, Switzerland. Rules most people have never heard of, negotiated behind closed doors at the Bank for International Settlements. These Basel rules say banks need to hold equity capital against risky loans. If they want to lend $100, maybe they need $8 of their own money as a cushion. That's it. That's the leash. But here's what's insane. Banks don't lend from deposits anymore. They create the money when they approve your loan. When you get a mortgage, the bank doesn't withdraw cash from a vault. It types numbers into your account. New money. Created instantly. You sign a contract promising to pay it back, and that promise becomes the asset. The money exists because you're in debt. More than 90% of the money in circulation right now isn't printed by governments. It's created by private banks, out of nothing, the moment someone borrows. Let that sink in. 3 unavoidable consequences. This design guarantees 3 things. 1. Inflation. Because banks multiply the same dollars into endless credit, your money loses value. Prices rise not just from supply and demand, but because the currency itself is being diluted. Every year, you're running faster just to stay in place. 2. Perpetual debt. Money enters the world as a loan. That means there's always more debt than there is money to pay it off. The math doesn't close. Someone, somewhere, must default, or borrow more. Forever. 3. Concentrated power. Banks collect interest on money they never had. Governments borrow to fund wars and welfare without raising taxes directly. The wealthy, people who own assets like real estate and stocks, get richer as inflation pushes prices up. Meanwhile, your paycheck buys less every year. You work harder. They get wealthier. The system is designed that way. When the illusion cracks. The Great Depression. Banks lent wildly beyond their reserves, fueling a stock bubble. When panic hit, people rushed to withdraw. The money wasn't there. Thousands of banks collapsed. Millions lost everything. Banks multiplied credit through mortgage-backed securities, creating a housing bubble built on the same lie, more promises than reality. When defaults spread, the global financial system nearly imploded. Both times, governments and central banks bailed out the illusion. Trillions of dollars pumped into the system to keep the trick alive. Because without it, the modern economy cannot function. The uncomfortable truth. The system needs you in debt. If every household paid off their loans tomorrow, the money supply would vanish. Banks would have nothing to lend. Economies would seize up. You're not just a participant. You're the fuel. You're the collateral. Your willingness to borrow, to believe, to keep playing, that's what holds the whole thing together. What history is trying to tell you? The same trick medieval goldsmiths used to skim profits has been scaled up into the foundation of the global economy. And the same dangers remain. Bank runs in the 1800s. The Great Depression. The 2008 financial crisis. All of them are reminders. When confidence breaks, everything collapses. But every time, the response is the same. Patch the illusion. Print more money. Bail out the banks. Pretend nothing happened. And keep going. So what do? First, understand this. Money is not wealth. Real wealth is land, skills, resources, knowledge. It's things that hold value when paper promises dissolve. Second, debt is not neutral. It's a trap designed to favor lenders, governments, and the already wealthy, at your expense. Third, inflation is not an accident. It's baked into the system. It's the point. Does this mean collapse is inevitable? Maybe. Maybe not. But it does mean you need to rethink everything. Saving cash in a bank account won't protect you. Trusting the system won't free you. Building real assets, things that survive outside the cycle of debt and inflation, is the only path forward. The lesson. This isn't paranoia. It's clarity. If your money is born as someone else's debt, then your freedom depends on stepping outside that machine. History doesn't repeat, but it rhymes. The goldsmiths. The bank panics. The housing bubble. All echoes of the same story, a trick that multiplies promises beyond reality, and a public that believes until belief becomes impossible. And make no mistake, this story isn't over. Every financial crisis we've lived through is proof that the system's stability rests not on gold, not on productivity, but on confidence. And confidence is the easiest thing in the world to lose. So next time you check your bank balance, remember, most of it exists only as debt, born from a system never designed with your freedom in mind. Understand the trick, and you can protect yourself from it. Ignore it, and you're just another player in a game where the house always wins.